If you were born in 1995, the world economy has more than doubled since you learned to walk, and it's now racing toward about $124 trillion a year by 2026. And just so you feel how big that is, $1 trillion is a 1 with 12 zeros. If you spent $1 million every day, it would take almost 3,000 years to burn through $1 trillion. Here's the real plot twist. That future $124 trillion world is no longer built around one superpower. It's turning into 3 giant economic pillars. The question isn't just who's number one anymore, it's which pillar you're actually betting your future on. Because the map of money in 1995, 2025, and 2026 looks completely different. And your investments, your career, and your opportunities are already reacting to that shift. Let's time travel through 30 years of global money and see who's quietly taking the lead. When we say the world economy, we're talking about gross domestic product, usually shortened to GDP, the total value of all the goods and services a country produces in one year. So if a country is a giant factory, plus office, plus farm, GDP is the price tag of everything that factory produces in a year. In this video, we're using nominal GDP. That means we're looking at the official numbers for each year, reported in US dollars, without adjusting for inflation. So 1995 is measured in 1995 dollars, 2025 in 2025 dollars, and 2026 in 2026 dollars. That means part of the growth comes from higher prices over time, not just from more things being made. But it still shows how much bigger the money world has become. In 1995, the entire world produced just over $30 trillion a year. By 2025, we're around $110 trillion in yearly output. And based on projections from sources like the International Monetary Fund, that number could reach roughly $124 trillion by 2026. In a single adult lifetime, the world went from about $30 trillion to over $100 trillion a year. If you don't update how you think about money, you're still living in a world that no longer exists. Let's start with the giant that refuses to fade, the United States. In 1995, America was already the world's largest economy at around $7.6 trillion, roughly a quarter of global GDP back then. Today, in 2025, it's projected at roughly $30 to $31 trillion a year in output, still about 1/4 of the entire world economy. By 2026, the United States is forecast to reach about $31.8 trillion in nominal GDP, still sitting at number 1 on the global ranking. That's not just size, it's concentration of power. The United States still anchors technology, capital markets, and consumer spending. When Wall Street sneezes, portfolios in Europe, Asia, and Africa still catch a cold. So any serious global strategy has to respect one simple fact. The US dollar and US markets are still the core operating system of global finance, even as the center of gravity starts to lean east. Now we shift to the real acceleration lane, Asia. In 1995, Japan was the second largest economy at about $5.5 trillion, while China and India were still called emerging. Japan felt like the Asian anchor. Today, that story has flipped. By 2025, China is projected around $19 to $20 trillion a year, India around $4 to $5 trillion, and Japan still near $4 trillion, but no longer in second place. These three together are turning Asia into the new growth core of the world economy. Look 1 year ahead. In 2026, forecasts put China at about $20.7 trillion, India near $4.7 trillion, and Japan around $4.5 trillion in nominal GDP. Add in South Korea and the ASEAN countries like Indonesia, Vietnam, Thailand, and others, and Asia as a region could reach about $52.7 trillion in yearly output. 30 years ago, the question was, will China ever catch up? Now the question is, how do you invest in a world where Asia drives the next wave of demand, innovation, and middle-class growth? Then there's Europe, still powerful, still rich, but moving slower. Take Germany. In 1995, Germany was already an industrial powerhouse. In 2025, Germany's economy is projected around $4.7 to $5 trillion a year. Add France, Italy, Spain, and the rest of the European Union, and you get a bloc worth well over $20 trillion today. By 2026, Germany alone is forecast at about $5.3 trillion, with the broader European region around $27.7 trillion in total output. Europe's strength is high-value manufacturing, strong regulation, and quality-driven exports, not rapid growth. Over the last 30 years, Europe didn't collapse, it matured. The trade-off is clear: social safety and stability in exchange for slower expansion. For investors, that often means lower upside, but lower risk. When people say EM, they mean emerging markets, countries that aren't yet rich per person, but are growing fast. Places like Brazil, Mexico, Indonesia, Turkey, Nigeria, and many others. Taken together, regions like Latin America, at around $5.3 trillion, and the Middle East plus Africa, at roughly $8.1 trillion by 2026, will decide the next big waves in commodities, infrastructure, and demographics. These markets are where volatility is the price of opportunity. Over the past 30 years, many of these economies moved from under $1 trillion to $1, $2, even $3 trillion in yearly output. They don't always dominate the headlines like the United States or China, but they quietly move resources, populations, and future consumer demand. Let's zoom out and feel the last 30 years in one shot. In 1995, the big three were the United States, Japan, and the major European economies. China and India were still in the potential bucket. The world produced around $30 trillion a year. Fast forward to 2025, the world is near $110 trillion in annual output. The top of the list reads United States, China, Germany, India, Japan, the United Kingdom, and France. The center of gravity has shifted from a US, Europe, Japan world to a US, Asia, Europe world. In one generation, Asia went from emerging to essential. If you're still investing like it's 1995, all in on one country, one market, one currency, you're basically driving with an old map of the world. Here's where the story lands in 2026, based on those projections. North America, led by the United States and Canada, is projected at around $37.8 trillion in yearly output. Asia, driven by China, India, Japan, South Korea, and ASEAN, could reach about $52.7 trillion. Europe comes in around $27.7 trillion, still a massive, high-income bloc. The world is quietly becoming a three-pillar system: North America, Europe, and Asia, with Asia now the heaviest pillar in pure economic size. That doesn't mean the United States is done. It means no single country owns the script anymore. Innovation might be born in Silicon Valley, scaled in Shenzhen, coded in Bangalore, and regulated in Brussels, all for the same product. So what does a $124 trillion, three-pillar world actually mean for you, the investor, the builder, the student, the parent? It means U.S. stocks and technology are still structural long-term compounding machines, not a fad. It means Asia is now the main engine for future commodity demand and middle-class consumption. It means emerging markets are where the highest alpha lives, but only if you respect the volatility instead of pretending it isn't there. And it means global diversification is no longer optional. It's the minimum entry ticket. In a world that doubled and then doubled again, staying purely local is the new risk. The money map changed. The question is, did your mindset change with it? 30 years ago, someone looked at a $30 trillion world and thought, this is huge, this is it. Today, we're looking at a world heading toward about $124 trillion a year in output, with billions more people stepping into the global middle class. The most dangerous thing you can do now is think small in a world that's thinking global. You don't have to predict every country's future, but you do have to update your mental map of where growth is, where risk is, and where your own opportunities might be. On this channel, we break these giant numbers down into simple, practical moves: how to save, invest, and build a life that keeps up with a $124 trillion world. If you want to think like a global investor instead of just a local consumer, hit subscribe, share this with one friend who needs a bigger map, and stick around. Because once you understand how the world really makes money, you stop feeling lost and start building your own clear path.